to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night, and with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and to look forward at what might happen in the next week. And always fun stuff in the middle. Often do interviews, or we answer your emails, and sometimes we do a fun segment called Trade It or Fade It. And we're going to have that today. You are going to enjoy it, so make sure that you watch it. This week brought some, well, chop early on in the week, but markets kind of holding in a tight range. Everybody was waiting for the ECB announcement, figuring that, well, this was the opportunity for Mario Draghi, the head of the ECB, to use that, big bazooka and really stimulate the economy there in the Eurozone, which is really languishing. So what happens? The news comes out on Thursday, and we see that they lower interest rates again to minus 0.4%. Can you imagine? And they raised their QE from 60 billion euros a month to 80 billion euros a month that they're buying of their bonds. And that is, of course, supposed to be stimulating the economy. Well, when you do something and it doesn't work, then just do it bigger, right? Sounds like some bad trading, if you ask me. Anyway, we got the move that we expected in the markets after that kind of an announcement. It was really quick. It really didn't last very long, and there were some big reversals in there. It originally sent the dollar up and the euro down. Everybody would have expected that. The stock markets all popped. We had the E-minis up 20 points. Everything looked like it was going to go up. And then Draghi started to speak. And there was a big change in there, and markets reversed big to the downside after basically said, we're done. And the markets turned, and big changes in there as the euro had this wild swing, just enormous move. E-mini S&Ps from up 20 to down 20, and then back later in the day to unchanged. It was just a huge move. And then Friday, the market got legs again. Everybody started to rethink everything and say, well, maybe it is stimulating. And then we have the stock market moving up to a recovery high today, up close to 30 points by midday in the S&P 500. So strong looking market here today as it moves into some resistance area. We'll look at that in our short-term view for the week. Let's get back to this discussion of negative interest rates well, so many countries, like 23 of them in the world, have negative interest rates right now. What do negative interest rates do? Well, they're supposed to stimulate the economies, right? They want to essentially get you to spend your money rather than save it, stimulate, get businesses to do things. Well, let's look at this. What are the drawbacks to negative interest rates? Well, it affects seniors and savers, right? Because, well, they've saved money for years, put away money for their retirement, holding on to money so that they could earn some money later on that money when they're not really able to work any longer. And what happens? Well, they can't earn anything on their money at all, so they kill the seniors and savers. Banks, well, their intent is to get banks lending money, right, to stimulate the people out there to borrow because it's so cheap to borrow. But what does it really do? It discourages lending because the banks can't make any money on the loans. There's no money to make because they're so cheap. So essentially, it's counterintuitive, but lower interest rates cause an economic slowdown. When are they going to get this? They went to college, didn't they? Also, you know, they want companies to borrow because it's cheap and then grow their companies and hire more people and stimulate. But they're afraid, they're confused about these low interest rates, and they don't know what's going to happen to the economy once you get past this period of this big experiment that's going on. All of a sudden, interest rates pop big on the upside. You get some big inflation that comes out of nowhere, and then what happens to the economies? They collapse, right? And all of they'd be growing their businesses just when the interest rates are exploding. Well, they don't want to get in the way of that one, do they? So they don't do anything but borrow money, maybe to buy their own stocks. And what does that do? Well, yes, Draghi said it today. He said that QE actually causes income inequality. Well, it does. And that's why we have it in this economy here in the United States, because we've had all this QE and incredibly low interest rates. Companies buy their own stocks, they push the assets up, asset prices go up, and the wealthy benefit from it, right? Nobody else. There you go. Income inequality gets even worse. So Bernie Sanders, maybe you don't want to pick on Wall Street so much. Pick on the Fed. They're the ones that are doing it. Anyway, you can get it. Cruz actually gets it. You heard him talking about it. Rubio gets it too. I'm not sure about Trump, though. Not sure he gets that one at all. So that's what negative interest rates do. And I just wanted to share that with you. A bit of a rant, because I'm kind of sick of it. Anyway, this week we had the gold market. Well, you know it would be firm in the case of when the stimulus is high and going on, and all of this fear that, you know, fiat money is just going to keep losing its value. So there's no wonder gold kept chopping higher, up near, pushing up near $1,300 an ounce on what has been a super big move from, you know, under 1,100 in not all that long of a period of time. The dollar, after some wild chops, has I'm going to call this a scary pattern. As a matter of fact, if it gets below 95.30, it's going to be in horrible shape, and the dollar could collapse at that point. And of course, gold is going to explode when that happens. And there's a lot of risk in that. These patterns really in the dollar turn scary in these last couple days, based on the fact that, well, we really can't go any further with this unless they've lost their minds. The oil market, well, it's moved up to an important resistance zone. Also in that 38.5 to 39 area. We were looking for 38.5. Our long-term view is even higher than that. You can go into our big picture analysis segments and take a look, become a member to see those. So oil strong on the week still. Let's take a look at our 60-minute calendar of the E-mini S&P, which looks at the overnight trading and the daily trading, trading during the pit hours, and we will see all of these moves and what actually influenced the market. So here is the ES on a 60-minute chart, and we'll take a look here at what happened on each of these days. You can see on Monday, overnight, there was kind of a downward move in here. Eurozone pulls back after its recent gains that it had. Asia didn't do a whole lot, but iron ore, that really brought the moves in here. 19% gain, the biggest day ever in iron ore, trading at 63. Goldman Sachs still sees iron ore falling to 35, and they also see the oil market going a lot lower now also. So they're very bearish on these commodities. U.S. stocks, they were lower and then absolutely exploded on the upside. Note, Hillary Clinton comes out and she's taking aim at fracking. Oil surges 5% in there, because if she takes apart the fracking, then there goes your supply, and that's what has also been helping oil, because she still leads in the polls, right? Big there update right there is oil pushes the market up. Tuesday comes, well, overnight they're selling them again, right? And oil, which had that big rally, there's where it reverses to the downside, and you can see the big chop in here that we had. Mining shares, they retreated from that big short covering panic that they had the week before. China export data, it absolutely crashed. And that really is what hurt the market overnight in here. Oil, well, it got over 38 and then reversed big to the downside. And remember me talking about that bottom in oil under $30 as that's the big one? Well, perfect. Comes Wednesday overnight, a lot of buying come in. You can see that in there. Eurozone up about 0.8% ahead of the ECB. China and Japan slipped to the downside. Dollar gets strong, and then that starts to hurt gold. We were looking for some pullback in gold around midweek. And then oil pops again, 5%, after it had this big reversal in here that moved the market down right there. U.S. stocks, well, they were firm, but rallies continued to fizzle in there. Well, came Thursday overnight, everybody was waiting for the ECB, and the buying started to come in a little bit overnight here, you can see. And then the ECB announcement comes out, and the craziness happens. Everything explodes. You can see the E-minis here, and everybody's happy, right? But then Draghi starts to speak, and look at this collapse right down over my notes. Who would figure that? And just this enormous 40-point break in the E-minis, and then this big bounce back later in the day. Well, what does Draghi say? He says, well, he's made his big play. He says it's really done. Don't anticipate lower rates from here. The action may actually be considered inflationary for the Eurozone. And that brings huge reversals in the euro and the dollar. They had massive swings on that day. Eurozone stocks, they were up 3% on the day, but they gave up most of those gains after that. And that big swing in ES was just something to see. Comes Friday, well, investors, they're rethinking this now about the ECB. Maybe it is stimulus, at least for a little bit. And so the Eurozone up about 2.3% on their markets. Asia flat. How's this? Italy sells their 3-year debt at a negative. This is Italy, and that's Italy who was in just that dire shape, and they had huge interest rates in there, and now they're at negative. It shows you the backwardness of this world. This truly is the bizarro world. U.S. stocks, they jump after these big swings, and you can see that, well, comes midday and a little bit later, they are just chopping around in here now, but up at higher levels, up about 25 points on the S&P as we speak right now. We'll see what this close looks like in here today. Oil hovering still around this 38.50 number in there, and definitely up near its high. So that is a look at our 60-minute chart, and you can see what influenced the markets, and lots of stuff goes on overnight, right? But I want to sleep. I don't want to trade those overnight markets. So it's not like I never did. I mean, I've been a trader now 41 years, and I've traded plenty of times at 2 and 3 in the morning. So depends on what your priorities are. Let's take a look now at our economic calendar for the coming week. Again, very little bit in the earnings, but some big things coming on as far as economic announcements for the week. Here is our earnings and economic calendar for this week, and you can see in here that earnings-wise, Triple D, not one I'm that interested in on Tuesday before the opening. Oracle, always a good one. After the close on Tuesday. Wednesday, that is probably the one I have the most interest in, is Federal Express after the close. Adobe, decent trader at Thursday after the close. And Tiffany comes on Friday before the opening. Big announcement for the week. Certainly, I have the arrow pointing at it, is the FOMC meeting, an announcement on Wednesday afternoon, and everybody will be looking for that. Consumer prices come out also on Wednesday in the morning. Not a whole lot that is going to be a big market mover other than that, and that's the big one. So you could probably figure that comes Monday, Tuesday, the markets might be a little bit quiet, but and then moving into here, and then the fireworks starts really after that. So just like we had with the ECB announcement, there's a potential for some fireworks here after the FOMC. That is the opening segment for this show. We're going to be right back, and that will be with the best and the worst of the week. When I do the best and worst of the week, what I'm looking at here is my universe of stocks, which is 330 stocks that are basically high cap, some medium cap stocks. And these stocks are the ones that generally came off of me building these lists over a lot of years, and the ones that were listed on the CBOE and other listed stocks in options really early on in options. So I've built this particular universe over decades essentially, and it changes of course all the time, but right now it's 330 stocks, and of those 330 stocks there's something like about 45 of them that are really good option traders, and we do most of our focus list of trading in those particular stocks, and I trade most of my trading within that universe. But still, I look at this broad universe because, well, most of the people that subscribe to me, they really want to get a broader sense for the groups, and a lot of them are investors, so they're looking at a lot more stocks. I don't really go into the lower cap stocks, but a lot of people write to me about them, and I still take the time to research them. So I wanted you to know all that about what this group is, this universe of stocks that I look at. So when I report to you the best and worst of the week, it's out of that group. So last week, well, we had these big wide swings in the lower price stocks. There were a lot of short covering going on last week, and then this week some of those have pulled back, and surprisingly some of those have continued to move on the upside. The biggest gainer of the week in the energy category actually is Whiting Petroleum, WLL. That gained 31% on the week, just a super week. We've been talking about the steel stocks, and we actually saw the bottom in there and reported that to our subscribers. And then when President Obama came out and put a 266% tariff on some of the Chinese steels, then these things really took off. And with a lot of volatility, U.S. steel has actually been able to keep moving on the upside. Now, it's moved up into an area where I think there's trouble. In full disclosure, I shorted U.S. steel today because I think there's going to be a pullback in there. Let's take a look here at the chart in U.S. steel, which gained 17% on the week. It's gotten up into a resistance zone. Now, those of you that are new to how we do charts, you can see in here this green zone. That's a rising zone in this cycle that is pushing up right there. So we saw the bottom forming in here. It came right on time and then moves up, and this is the resistance zone now. And now you see that dotted line. Well, that's what our subscribers see as we are forecasting this to at some point soon roll over from this resistance zone and go into a correction. This is a huge move from $6 to $15 in this stock, tariffs on China or not. So you can see that. Now, if we switch over to the daily chart, you could see here there's that resistance zone. It gave an evening star right over here, and that big shooting star said that it was likely that that was a stopping point. Now here's the next resistance area up there that you can see, and you have this big doji that's going on. It's still early in the day. You can see that right there, and that is suggestive of the fact that this upward buying momentum, and by the way, the slim ribbon, see that green arrow right there, that said that momentum had turned positive back with the stock around 860, 870. Then it broke out over the 89-day moving average, a breakaway gap, and then exploded, right? So all of that was the analysis that had us positive. Now we're getting at this point where we're expecting a pullback. If you look at this shorter term cycle, this is a daily chart. It says the next week is likely to see some pullback. We're going to look for a potential of it getting down to the 13-day moving average and the Fibonacci retracement level. We'll call it 1190-ish or something like that on the downside. So this could be a good short side trade. I'm in there already. That is a stock that did very well this week. in U.S. Steel. Another gainer in the week, this is a stock and a company that overall I have not liked, and it had a giant move recently. Urban Outfitters, URBN, up 21% on the week on an earnings beat. And many analysts are all over this thing, raising their targets on it, and they're saying the worst is behind it on the stock. Now let's look at this rally where it came up to right here, and you will see that there is a major 50% Fibonacci retracement number just where it traded up to this week. Now we hated the stock and it collapsed. I mean, we were completely right on it. Now when this thing moved out from above this downward trend line in here and moved into this upward positive phase, then that said to us that this was, a period where you couldn't be shorted anymore. You had to let this mature. Then it breaks out above that moving average and goes right to the 50%. Now, you can see we have it drawn in that we believe it's going to go into a correction here. It has come a very long way, and we think that it will have some kind of retracement in there. Now we look at also at the shorter term information on this one, and we have this at almost 3 standard deviation move on the upside, which is extraordinarily overbought. So we expect it to pull back in there. Take a look here at this daily chart. We'll blow up for you, and you can see this also. Now, we don't really short stocks that are in early phases of rising and momentum turning up. So this really turned positive here, and you could see it just blew it out on the upside in here. A lot of these analysts now have targets that are only in the $32, $33 area. At 3 standard deviations and this of distance away from the 13 moving average, we're going to look for a retracement in here, some kind of a pullback in there, and that's a stock that I think will give you some downside action. I think it's just too much, too fast. This is another one of those too much, too fast things. This pattern in here on Dollar General, their earnings beat also, same store sales up 2.2%, but was good. And this to me looks like an overreaction. Gains 12% on the week. This is a new high on this stock. You could see that it had 2 sell signals right there, and then gave this bullish pennant, and then big upside gap on this earnings report. Again, 3 standard deviations overbought. This is absolutely craziness on this level, and we're going to look for a pullback here in a Dollar General also. Let's take a little bit of a look here at some big oil stocks that had some good gains on the week. CVX, when you get CVX moving up 8% in 1 week, you're getting a giant move in there. Take a look here at our weekly chart in CVX, and you'll see this has been in this rising zone. We actually nailed the bottoms in here on this group, and you can see the resistance level it's now getting up to, and our forecast that we have drawn in here. And you want these charts, become a member of level 4 at askSlim. And you can see our forecast is that likely going to roll over and go into a corrective period in here. Maybe a little more time on the upside, and you could see this last high over here. When you make a positive basing cycle, that we call that like that, and it goes up, the odds are pretty good. In fact, they're about 3 to 1 that they're going to test that last high. That last high right now comes in here at around 99. Stock is trading at 94.84, so I think there is a little bit more room on the upside in here. But then I think after that it's going to roll over. So that shows you a good pattern there. And you can see in here as we look at the daily that now this big doji and getting into this resistance zone, it's probably going to be tough going as it tries to move up there. One more stock we'll look at in this category is MRO. This up 8% on the week. This one was a super beaten up stock, 42 down to $6. How's that as oil collapsed? And now it's getting up into this resistance zone. I could see it getting up close to that 14 number over there, which is this 13-day moving average. I'm sorry, 34-week moving average coming down. So this one has a little more upside, and it's early in this move. So So I don't think really a shorting candidate in MRO. One more we're going to look at is Monsanto, MON. Now this one is up 8% on the week also. Interesting, soybeans are putting in an inverted head and shoulders and may actually be breaking out of what was a pattern that looked a little threatening and putting in some kind of a bottom. Now what I want you to note in here is the cyclicality. See these two blue lines in here? That's the time frame that we were looking for a bottom to come. And you can see that we're basically right in there right now. And now you see this week as it engulfs the previous week and says that's likely the bottom. So our forecast says up here in Monsanto. You can see the cyclicality in here. Man, is it ever clear. Excuse me. As you can see these rhythms right in here, up and down, following each of these cycle patterns. And right now we're in this rising zone. So Monsanto up 8% on the week. And a stock that looks very viable to me. That's the best of the week, and we'll be right back with the worst. For the worst of the week, well, some of those stocks that had big jumps last week in all that short covering in mining and materials gave back some good amount of ground, like Valet, Cliffs. They're down like 10 to 13%. They had some enormous moves on the upside, so that makes sense. Some of the stocks that are worth looking at in here, first one, CSIQ, Canadian Solar. That's a stock that basically I love. I think it's going to be one of the giant performers in solar moving forward. Right now, what's against it really is that though it's a Canadian company, it's really mostly in China. And that has been weighing on the stock, but it is a cheap stock. They missed on earnings this week, and they really are. We've been avoiding buying this one because we thought the timing wasn't right. I want to show that to you in here on our patterns and what we're really waiting for. Now, note in here, I mean, this is trading right around an 8 PE. I mean, this is just super cheap in here. And when you look at these big patterns, note these big ones right in here. Those are the major cycles, and here are the minor ones right in here. And see, the rhythm really told us that this rally would likely fail at resistance, and then it would come down here into this May period. This, to us, is really the period to buy it, where we think it's going to have a monumental move second half of the year. So this one, they had a big miss. Note the evening star that's formed right over here at the moving averages. Take a look at the daily chart, and you'll see also that this stock came up to around that 89-day moving average and failed. Big downside gap actually on extraordinarily high earnings. It might not be able to do a lot worse than getting down, you know, into this $18, $17 area over these months that we're looking for. But I think at that point, it's going to be really a nice buy. So this was a bad one, down 14% on the week. Another one worth looking at 14% down on the week, is Caesars Entertainment. This one I really rarely trade. And you can see in here the cyclical rhythms in here. It's reminding me, same pattern we just saw on CSIQ. There's that evening star pattern right there. And the cycle action says this one goes down into May also. Really very similar in there. And then after that, it could have a better period based on the cyclical rhythms that are in here. So Twitter, we're gonna, that one down 14% on the week. We're not going to look at Twitter right now because someone mentioned that in our Traded or Faded section coming up. So you'll see that one in there. But Twitter loses 14% on the week, and we've got some interesting comments on that one. Rackspace down 10% on the week. This one is buyable to me, really. It backed off to a support area. I'll show you that in a moment. And the intermediate pattern is really okay. So here you could see this kind of upward channel that it's moving in. This is a rising zone. It's early in there. So this one down pretty bad on the week, but recovering here on Friday, and I think it's really okay. So if you look at right in here, where it backed off of this resistance number, the 89-day gave you this engulfing pattern. You can see right in there. But if I put up a Fibonacci retracement tool that you can see right in here, here that it's backed off right to the 50 right there, and that to me says, well, that's probably a nice buy area, and that says that I would say this upward channel is intact. We'll probably get it to go back up to the 24 area. And the last one we're going to look at in this category, JBLU. They came out and said that their average seat revenue plunged by 10%. That was incredible. Now take a look at this pattern as we look at it a little bit closer in here. As you get this sell warning right here at the 89-day moving average, it gives you this little flag right there, and then absolutely collapses. So this one is one of the airlines that we really have not liked. It was really in a bad pattern. Here's the weekly pattern. You can see it hits our intermediate resistance zone, absolutely nails that 34-week moving average right there, which was really what drove it up this whole period here over 2 years, right? And this has it declining into April based on what we're looking at. So you can see our forecast right there, pointing to that probably is still going to be a bad stock for a while. So JetBlue down big as their average revenue per seat crashes. That's it for the worst of the week, and we're going to be back in a couple seconds with Trade It or Fade It. All right, this is Trade It or Fade It. This is one of the most fun segments that I ever do. Been doing this one for a long time. It's an opportunity for you to share your ideas, how you come to your work, how you come to the research, and what the trading strategy is that you want to do on a particular symbol. What I do is I send out an email to my members and say to them, share with me 4 things about your favorite trade. Number 1, what's the symbol? Number 2, what is your analysis? Why do you like it specifically? It could be technical, fundamental, maybe you have a gut feel. And what is your strategic approach? Are you going to buy or sell some stock or future, or are you going to do an option trade? And what is your holding period? Is it just a few days and a little swing trade, or are you looking to hold it for a long time and invest? Got a whole bunch of replies. What I do is I pick out the top 5 so I could fit them into this segment and have some real good ones here. First one from Nick S. I got to tell you, there was so much thought and detail that went into this one. I had to read it quite a number of times, and then he gave me some alternative strategies in there, so kind of culled it down to a single trade here. And great work, Nick, in sending this. Very interesting stuff, because this is in UVXY. This is a leveraged, inversely correlated product to the VIX, VIX. Did I say inversely? It's actually a correlated product to the VIX. So when the VIX goes down, the UVXY goes down, but it goes down more because it's leveraged. So he wanted to do a trade in here, and he says he likes selling premium in the UVXY. He says it has very high implied volatility. Well, that's true. 135% is what he was looking at here. And he says what he wants to do is sell weekly puts in there. Naked puts in the UVXY. Now, a naked trade in something as wild as this may not be suitable for everybody. In fact, I'm sure it's not. And if it were a call trade where you could be naked short calls in the UVXY, well, this thing can spike up so fast it's incredible. So I definitely would say no to that one. That would be a fade. But in this case, wants to sell puts, and this, when it goes down slower. He said the probability of selling the weekly 28 puts is what he was looking at in the money. Is about a 75% probability of profitability. He says that this is with only 8 days to go. That was yesterday, so it's 7 days to go now. It would be an accelerated depreciation period because, well, it's a very short period of time, and this is when option decay does pick up in these last, we'll call it 10 days, 7 days. So that was what the trade was. Sell a put in there naked to capture that option decay. And the 28 put was out of the money. Now, I have to kind of change this a little bit because the stock market's up big today, and the UVXY is down big. So we're gonna skew this down a point for him and still use the 27 puts and see if that makes sense, because the markets have changed since he sent it to me. He says it's in the unlikely chance, which is 25%, that this naked put did not expire worthless, that he would then get assigned the shares, and he would be long UVXY at 27, because we're going to sell the 27 put. So he said, because of some excellent market analysis made by Steve Miller, this could have been an ad for me, right? And because of the way I see it also, Nick said, he says that we're really not in a bull market, and that this appears that we're having a temporary upward correction. He feels confident that if he were to sell this put out of the money, well, he could capture all of the decay, or that he would then, if he was wrong, he would then own UVXY for the strike price less the credit that he took in. In this case, it's trading at about $1.20. So $1.20 put less subtracted from 27, he would then own UVXY at a 25.80, and he'd be happy doing that, he says. So great for that, if that's what you think, that it's safe to own that at that price. He says he would be happy to hold that, he said, for several months. Now there's an issue, because UVXY has a natural decay to it, because it's a leveraged product, and it continues to lose value all of the time, just actually like an option does. That's the how those things are set up. So holding it for a long period of time might not be a good idea. He says the strategic approach is twofold. First, he says, I get to collect the premium, and second is I get to own UVXY for that much less, and that is true. He says that the entry for this trade would be about 1 week away, so it's 7-8 trading sessions. In this case, it's only 5 trading sessions. If you said 1 week away, so I'm not sure if whether you mean calendar or not. But let's just say with in this case 5 trading sessions to go, that sure seems like, you know, a good period of decay that you're going to make every single day. You sell it for $1.20, you're going to pick up some, you know, 20 something cents every day in decay. He says that this to him is a good 75% chance at least, and he is also using my tools for techs scalper, the chart setup for scalpers, which is a great video there, and using those charts. And he says if those charts tell him there's an issue, he just may get out sooner and save some money. So that's the longest lead in to all of these 5 that I'm going to do right now. But you spent a lot of time on it, and I want to do it justice. I got to tell you, great analysis on this. Well thought out. It's a great concept, except for the fact that you cannot hold UVXY for long periods of time. So overall, I would say that, yeah, the whole concept is good, but I'm going to put up this UVXY chart really quickly so that you can see what I mean by a decay situation. Here is UVXY on a weekly chart, and I put this up, and you're going to see, well, that $360 price is not really real because of all of the decay that went on during this whole period of time, and you could see that this just continues to erode. So UVXY, long holding, forget about it. Now, you essentially set up this whole trade as a 1 week trade doing weeklies. That, I think, is a good trade, and I think there are appropriate times to do that, especially when the stock market is at a resistance area. So do I think it's a high probability trade? I do. Do I like it for 1 week at a time? I really do. I think that the risks of VIX going down sharply is small, and you know what? I say trade it. Really a good one. Great one, and thanks for all the work that you put into that. Next one we're going to look at is from Michael B. He writes me about Chipotle, CMG. And he says, now this is another person looking at IVs. He says the IV is enough to sell premium in there, and the stock has made some rebound from its lows on bad news, but the media still lingers, he says, which should prevent any near-term big rebound. Chipotle, of course, has had problems with, well, E. coli in their stores and having to close some, and now recently 4 employees getting the norovirus, which is has been a big issue for them. He says it's already sold off, and he says the downside risk is somewhat limited, but it's a high-priced stock. So what he wants to do is to sell a condor in there to take advantage of the concept of the premium being high and being able to capture that and make money as it comes in, as the premium comes in and decays. The iron condor he's looking at is the April 560, 550 call spread. So you sell that call spread, and to sell also the credit spread of the 455, 445 put spread. So you're doing 2 10-point put spreads, both of them out of the money, and both of them, if you stay inside of that range, will decay to zero. Well, there's a big problem with that, though. The problem is that you can't execute it at the price you said, $3.15 to $3.30. As a matter of fact, that's a 10-point wide spread. You wanted to do it for about 1/3 the average distance of the strikes, and you can really only put that on for $2. So that means to get your 315 or 330 credit on the whole condor, you would have to get much closer to strike prices to do so. I actually think Chipotle is still a very volatile stock, will test you and threaten you if you get too close to those strike prices and only take in $3. I think that's an issue, and I'm going to say fade it. I don't like that, and I would take the other side of that trade. Next one is from James F. He writes me about Marathon, MRO, and he's looking at price action on March 3rd to March 7th on MRO. So we're going to take a look at that stock, MRO. And we'll put up the daily chart in there because you're focusing in on the daily chart, and we'll look at that. So you were talking about March 3rd to 7th. So let's take a closer look in here. And that period right in here is where this evening star formed, right there. And the point you're looking at is that you had an evening star in that period, and also Harami cross. That's that little cross right there inside of the body. And that looks to you like there is a potential for the stock to retrace on the downside. Now, in here, there's a few things I want you to note. You've got upward momentum in here, and you have resistance coming right up over here around the $12 area, and you also have some support coming right in over here. We'll call it around the $9.50 area. So it's a pretty wide range in there. So what you're saying is that these are reversal signs, and you're bearish. Given this, you'd be inclined to either buy an at-the-money put or short an at-the-money call spread, both in April, one or the other. Of course, some people would do both as far as that goes. You say trade it or fade it. Oh, great one. Without the benefit of your transcendental charting gifts, I would otherwise be persuaded to form a seance to access the wisdom of Karnak the Magnificent. I get some great emails, don't I? So what you want to do is essentially get short the stock. You want to either buy puts or you want to sell a call spread. Well, in here, implied volatilities are at around 90. Now, generally, when you have high implied volatility like 90, that favors selling out of the money call spreads because you get more money in and you have a higher probability of success. Now, in this case, they are way too cheap. In fact, if you look at the April 2-point spread in there, it's trading for like 32 cents. So that's the 10-12. So that's the call spread. It doesn't really make sense to sell that one. I actually prefer buying the put side of it But you said buy a put, and I say actually it's probably better to do a put spread in there. You might consider the 10-12 debit put spread for like around 95 cents. Anyway, I like the concept. I think that the stock probably has a risk reward right now to pull back a little bit. I think your analysis of the candlesticks are correct, and I say trade it. Good one, and thanks for sharing. And I love those comments. Karnak the Magnificent. Next one is from Gary L., and he talks about Whirlpool. He says, it's hitting resistance at prior swing highs and seems to be topped out at the 200 SMA, simple moving average. I actually don't look at the 200-day SMA. The closest I get to that is the 170-day, which is really the 34-week that I look at on my weekly charts. That's it's pretty close to 170-day. I don't exactly see it lining up the way that you do. But here's the points that you make, Gary. You say consumer credit numbers are quite pathetic. Well, that is actually true. He says, and also, so most of big ticket sales coming up into the earnings season have likely been worse. He says, I believe that home builders, building materials sector, and construction materials sectors are showing signs of topping here. Also, he says, recent increases in consumer savings rate make it look like, well, maybe money is being put in the bank accounts there versus, or maybe under mattresses, versus being spent on big ticket items. All interesting points. He says, I'm looking at the in-the-money April 60 put for a swing trade. Stop slightly above the 200-day simple moving average. I don't have that on my charts. I could see how you would look at that as a stop out point, and your holding period 3-4 weeks. That's your time horizon. So let's take a look here at Whirlpool. We're going to take a look at these charts and take a look here at WHR on the weekly chart first. And first we'll say the daily, because I wanted to show this pennant in here. So there's the daily chart, and you could see, well, I look at the 89-day moving average. It's always very significant, and you could see here a pennant formed, and the stock has moved up out of that pennant. So we would have called that, and with positive momentum in here, the signal way down here at 137, that it's likely this was going to pop out on the upside. So that probably makes your entry on the put side a little better. Now, here's the important point to me, and that is where these resistances are. Now, there's my 34-week moving average, and I'm not sure where your moving average comes in. But to me, the stop point is right above here, the 78.6%. There's the last cycle, mid-cycle high point, and these levels right over here should be anyway, resistance areas. So in this area of 168, just about 4 points away, then the next level is 172.70, which would be what I would call the stop area. Now, cyclically, you can look at the patterns in here, note the big pattern, and note the smaller pattern. So you see these smaller cycles right in here, and you can see the perfect cyclical tracement of them right in here, and then the next rally, and yes, another pullback due right in here. So I would say the pullback support area, let's say it's 1/3 of the way down, and at around this 34-week moving average, that would be a target for me at about $54 down there as a pullback. And it would be, you said 3 or 4 weeks. I think this could take 6 or 7 weeks. I might go a little bit further out in time in Whirlpool. But actually, I think you've got it right. I think it's getting up to the point where it should pull back. I might be a little patient on it, just a little bit, because the market's got a little bit of legs. And then I think you're right. And you want to buy puts in there. I think it's going to be a winning trade. And I would trade it. Good one. And the last one is from Lisa D. She's talking about Twitter. I think she's been watching or listening to some things I've said. She says Twitter, well, she wants to be long and buy the stock. She says she has a gut feel 300 million active users out there. She says someone's going to want to acquire them. She says, or they might actually be able to change this company in a way where they can monetize it. You know, I think all of that is really right. Full disclosure, I'm already long Twitter. So let's take a look at these charts right in here, and you'll see what she's looking at, and maybe what I'm looking at, because, well, I look more at the technical side. Take a look here at this Twitter chart. So we're looking at longer term patterns in here. Whenever you see a dotted line in here, you know that I have been exploring different cyclical layouts in here, and usually what's in here is my last one, and I think is pretty well aligned. And here we're in this rising zone right in here. Resistance up in this area of about 22.5, trading at 1682, and in this rising zone could be good. So often when you're getting these rising zones, you get nice rallies. This one from around $21 all the way up to about $31 right there. This one not as good, and it didn't last as long, but from around $32 up to about $38, $39 actually. And this one right in here, well, this one went from $36 up to $53. So those are what rising zones get you, and well, we're in one right now, and this one doesn't seem quite as mature as it can be, so I kind of like that. What else I like in here is this right in here, as we have this smaller pattern, and it is, yeah, pulling down a little bit in here and getting into this support zone. This is my buy area for me. This is about a week or a week and a half away where I think it starts to turn up again, and that's a good one for me. So I tell you, Lisa, you want to buy Twitter. I'm already long Twitter for the reasons that you believe, plus the technical reasons. I'm with you on that, and I say trade it. And thanks to everybody who sent in all of these great trading ideas. Those of you that didn't get on it this time, well, I hope you do next time. And that's it. And we will be back shortly with our short-term view. All right, short-term view of the coming week. Just want to remind you that we have 3 different levels of membership. You want to get in there and see our 7 categories of videos. There is a big library there. That's our level 2. Level 3 gets our rankings and setups, and level 4, all of our charts. Amazing things. Go to askSlim.com and take a look at our offerings. All right, short-term view of the coming week. I almost wanted to start this segment with Gene Autry singing "I'm Back in the Saddle Again," because this was actually a good week for us. We're going to call this an 80% week, as 4 out of the 5 markets did pretty much as we expected. The one market that didn't go well is the Euro market. We don't even know how to rate that one based on the swings. We had Euro going up, and we thought that it would get a nice pop, and it did. However, and the people that were in the short-term setups that we had did well if they acted quickly, and a lot of people did. But the rest of the markets, they were pretty much in line with our expectations. Let's take a look at what we were looking at and what we think is going to happen in the next week. We'll do light crude, the gold market, the euro, the bond market notes, S&P, and the VIX. Get a look right now at the light crude market. We look at only daily charts when we do this, but my analysis does figure in the intermediate patterns in there overall. So oil did something that was really strong. Now we thought the oil would go down and then come back up in there. We thought it would come down to some close support and then get a move back up. It probably didn't fall quite as much as we did, maybe a day less than we thought would come down, but then it did move up, as you could see right there, and that is the pattern that we expected for the week. We thought 38.50, would be come in a week or two, and it came already. Now we're looking at this period in here of a pretty good resistance area. For that reason, we're looking for for a narrow chop in oil. Now, a narrow chop would be a bold call, wouldn't it? Because we think we're in this resistance zone, so some selling is likely to come in here. We think that this upward momentum is strong, so buying is likely to remain in here. And we're early in this rising pattern here, so that to us really speaks to the fact that maybe we get into some sideways correction or chop in here. We're going to look for about a 2-point range only in the week, and we're up near the highs of it. Oh, we got up near the highs of it. Now we'll call a high of about 39.10 potentially, and a low that gets down to around 37.18. See this little green support zone in there? If it goes any deeper, it would be in this support number right over here around 36.50. We don't think it's going to go that far down, but we'll see. We're expecting this tight range in here for the week in the oil market. Next thing we're going to look at is gold /GC. And you'll see that here as we move into the daily chart. So what we were expecting was a 2 to 4 days down and then rally. Well, we pretty much got that. We got this right in here, decline right there, and then the rally. Now it stalled right up over there at 1287. That is not a big surprise to us. So we were looking for this period in here of correction. You could see all of these nested cycles in there. This is still quite a strong pattern in here. We're going to look for a range in here. Now, the range, this high of 1287, this is a lot like the oil pattern we looked at, where we're at a point where we're coming up to resistance, and it's likely we get some sellers that come in over here. We're also in this area of upward rise, where it's likely that these supports are going to hold. So we're looking for a 50-point range in here. This support zone in here, we think it's the worst that it would get down to, is around 1237, 1287 right over here. So we're going to give it this range in here of 50 points, and range bound for the week is really what we're looking for in the gold market. Next thing we're going to look at is the euro. This chart is just phenomenal in here. We're going to take no credit for this at all, even though a lot of people made money on what we said. Now note the dotted lines in here. Because of this action in here the last couple days, we have to really look carefully at how any shift had occurred in here. So we're examining that right now. So when our, when people get our charts, look at this, you'll know what we're doing. We're always re-examining our patterns in here to make sure that we are doing the best we can to understand what's going on. So we had expected in the euro that it would roll over for 2 or 3 days, and that the risk was it would get to around 108 or a little lower in the next 2 or 3 weeks. So it started to roll over. It did exactly what we thought, and it comes down here and touches support not far over the 108 number. We gave it no credit for this kind of a move in here for that to occur, and that actually is why we're not going to take any credit on the week on this one. And now we've established a new support zone in here, and we think it's going to get tested. It's reasonable after this move, but the dollar is so weak and looking so ugly, we're not 100% sure about it. We're going to call a choppy down week and a modest correction in here, with it getting down to this 38%. We're giving it a pretty bullish look in there, coming down to that level right over there. That would be around 111. That's our downside projection in a minor correction on the week. So test minor support, a little bit of downside in there on a minor correction, but overall, what was a look of a bad looking pattern in there really has changed and improved, and the dollar is really looking a lot worse. Let's take a look at the bond market. Now, we were looking for bonds to go down, right? We were looking for a short entry in there, actually. Take a look at this zone in here. We thought it would potentially get up to this short selling resistance zone around 29.30. We thought it might be in there. And you can see this day got almost up to there right there, and it just rolled over. It's following the pattern absolutely perfectly as it continues to come down in here. The 30-year actually has a little longer period. We still haven't resolved the difference in those patterns, but they've both been pointing to the downside on the intermediate patterns. The shorter term patterns the same, and that's why they've been coming down in this direction. And we expect it to, well, to continue for probably another week or so. Our downside target has been in this area of 127.29 to this moving average, maybe even as low as 127 on another support. So we're expecting this week to continue this downside action. And then sometime either late week or next week is when we're looking for that to end, and then to start to move back on the upside again. So target in the 30-year around 158.28, and target in the 10-year probably somewhere in this mid 127s that we're looking at in there. So now the stock market was a little tricky the last couple of days because of all this movement with the ECB, and that had it extend down in an anomaly, really a blip on the downside, and then move up again. It's really in the pattern that we expected, but it's now moving into some resistance, and it basically did what we expected. We thought it would dip, and our expected dip was to around 1980, and then we thought that it would challenge this resistance zone around 2013. Well, that was pretty much a bullseye in here as we switch over and put up the SPX, and you'll see how it traded. And again, just a little bit of a surprise little tail that it left back a couple days ago based on this ECB action, but basically the pattern is as expected. So we thought it would be, 16, 17 days into this modest support zone and then begin to move on the upside. It got a little bit lower here on that blip right there, but it's basically in the pattern that we expected. So now we're in this rising zone, and the resistance is between 2013 and 2023 right there. That is what should be a tough spot for it, but there's no selling as it comes in, because you see we're really only 3 days into this rally right over here, and they usually go for longer than that. Now if I move this down, you're going to see the next resistance zone, and that shows you this we'll call it 2042 to 2052 right there, 53, something like that. And this is very possibly where they're heading for in here, but that doesn't do anything to the longer term trend, which we believe is still sharply lower based on these bigger patterns that you can see in here. So we're expecting, we're going to call this week a choppy week, and still this upward bias that's going on, potentially getting up into this zone right here, but then after that we expect it to roll over to some serious decline going on in there. If the bond market's a lot worse all on its own, or the dollar market collapses, that is going to negatively affect this, we believe. So anything could stop it here in this zone, and we're going to give it a little bit more time on the upside, and we expect it to be a choppy and small up week. When I switch over to the VIX, you're going to see that the VIX is actually also talking about the same thing. We said last week in the VIX, we thought rallies in applied volatility would fail. And you could see that's exactly what happened in here. And this has, we're going to call it another 4 to 7 days or so in there. And that's this period that we're thinking the stock market could continue to ease, continue to rise and make a little bit more ground in there. And then after that, this turns up, and the weekly pattern is going to turn up also. So we think that this stock market rally that's going on is going to be over soon, and matter of some days, some number of days, potentially on the outside a week and a half would be our guess. and then turning back to the downside. So that's it for our short-term view. Hope you found that informative. I hope you love the show. Make sure you send us any comments that you have and testimonials to our website. Make sure that if you're not a member, you go and check it out. We'd love to have your support, and we know we bring really great value, because what we want to do is raise your odds of success. That's it for this week. I'll see you next week, and I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do